Happy Labor Day to all of the bulls and the bears. What we're going to show now is on that S&P where we had that original reversal, and this is a daily chart, and it was breaking below the 200-day moving averages, all of its moving averages. We hit a bottom here. Now on a daily level, we're back down in here in that pocket, consolidation pocket. Momentarily we had got above that trend line, but the S&P 500 is short-term oversold, and bull and bear moves work a certain way. And when we start looking at the 20-day moving average, that's going to be the red line up here is going to be the resistance. The 10-day simple moving average is holding that up at the current level. This was that 3, 4, 5 day. Look at this. This was that reversal. That was a counter trend. It didn't work. This was the price volatility. That's a narrow range day. But let us move to the monthly chart on the S&P, going clear back here to 1996. We already have a very good video about the history of the Dow, and right to the penny. So here's what's happening for the Dow, and this also is going to be for the Dow and the S&P are run the same way. So basically the Dow and the S&P are broke, and the 2015 move, like I said, we were going to get a big correction. We have all of that data on the site. You were given a chance to get out. If you were an innocent bystander and you had mistakenly come across this, it was very clear. This is a narrow range. 1, 2, 3, 4, 5 months in a trading range between the bull and the bear right here. But look at what happened. This is a monthly rectangular consolidation. Two ways. Either you bust it down, and you did. It wasn't to the upside. A monthly consolidation has a lot more relevancy than any other time frame. I'm going to give you the reading right now. I'm going to give that 20 months moving average right now. Here's what I'm going to do right now. Is I'm going to give you that. That's that red line. Here you go. That low, we also, okay, so here was it? 19.98. This is the 20 months moving average. Now, we are short-term oversold. We are not as overbought as we were. The monthly low on this is right here, but we just started the month of September. That can be a bloodbath as well, and we're going into a whole different seasonality period. We do know that. We do know that this was that low. This was that 1867 low, and this is that support right here. When we take a look back over here in calendar 14, we can see that this trend line right here held support, but we can also see here a monthly drop in 2014, and look at that monthly wick. It came right up. One of the things that we're seeing is a contraction with the 10-month and the 20-month formulas that we use between monthly moving averages or daily. This market for the bull is in trouble. But I will say the volatility ranges are going to stay elevated, so the bear and the bull, they get their up moves and down moves between the two parties. And I can just say that the volatility is going to be everything that we said. This is it. And this is the beginning of September 7th is the date, 8:48 a.m. Pacific Standard Time. We're going to be shorting into moves. there's going to be a lot more volatility coming. Volatility has to increase. This was a mini capitulation right here. Yeah, it was. Right there. On the S&P, the Dow looks the same way. That was a capitulation. For those of you who don't understand capitulation, I advise you to get in a free 5-day trial, take action for yourself. But this is the beginning right now of a major reversal. And, we're going to have certain trend lines that we come up, we're going to hit, and we're going to roll over. S&P 500,